Successful people have libraries. The rest have big screen TVs. Jim Rohn. My friends, spend your time wisely. There's only so much of it as we start contemplating time with our families and what really counts over this holiday season. Go ahead and recommit yourself or commit yourself for the first time to learning how to read stock charts. What could be more important for your future than being able to read charts and know which way the market, ETFs, stocks, commodities, whatever it is you're interested in, if it is trackable and we teach you how to determine that, what is better than knowing the direction it is heading? Again, we use fundamental analysis, particularly the price percent oscillator. That's our main indicator, a lagging indicator, along with the leading indicator called the derivative oscillator, along with Heikin-Ashi candlesticks, trend lines, Bollinger Bands. Simple stuff, but very, very, very effective. Now, let's jump into these charts and see what we see as this market rolls on toward the end of the year and into the Christmas season here in the U.S. What do we see happening? Well, it's a Christmas season around the world, but let's talk about what's happening. We see the S&P 500 down again today, not a lot, 0.17%. But you will notice that this latest candle representing Monday and Tuesday for the week is a red down candle. It's more like a spinning top close to a doji, but it is the first solid red candle we've seen since all the way back on the 30th of October. So again, not much of a red candle, but a little bit of one, and it's of course broken our weekly trend line. Price percent oscillators still positive, heading down. Derivative oscillators losing some momentum. So where are we going? Well, we're going to look a little deeper. That's where we are on the weekly. What's the 2-day? Remember, 2-day crossed over going down on that last, actually crossed over this morning. We can see, crossed over on the last 2-day candle, finished drawing this afternoon. We redrew that 2-day crossover back on the 21st. What, of course, that represents for us is, again, a change in the medium trend. The derivative oscillator has gone negative, and, of course, we have another red negative down candle. We broke through that 2-day trend on the last candle representing Thursday, Friday. This one is Monday, Tuesday. It is finished drawing now. Price is still above the weekly. We've tapped it with a wick on the bottom, but that is where we are right now. So it's showing us, again, blowing off some steam. Second down candle in a row. That first crossover, of course, would have taken you out of that up trade. Why? Because the 2-day has to be going in the same direction as the weekly. Now, that 2-day or that weekly, that last trend, did pretty well for us. Of course, if we look at just the weekly vertical crossover, not entirely fair, but we look where that occurred going up. That was back on the 13th of November. And of course, we look at the weekly, and you can see where things started off weak, but again, they just continued to build, and then this nice pullout point with this latest 2-day crossover going down would have helped you locked in a nice profit, jumping in point somewhere around the 350, 351 mark. And of course, it reached a high of 372.46. Somewhere around that crossover was 362.02, 362.02. So again, not bad at all. Now, let's leave the S&P 500 and move to the Nasdaq 100. The tech stocks, they're up for the day, 0.27%. What do we see going on there? Well, we had that weekly vertical crossover at the end of this last week, and my weekly vertical crossover line has moved on me. There we go. At the end of this last week on the 18th of December, this latest candle is a candle that is moving up. We can see that we have not tapped a higher high. We look at last week's high. I don't think we have, a 311.98. This week's high, 310.71. So we haven't hit a higher high this week, but that price percent oscillator is on the upside of the red signal line, derivative oscillator gaining upward momentum, green candle moving up the trend line. That is good to see. Now, what's the 2-day showing us? We had a weak 2-day candle previously. Was a red open box spinning top. That was a slowdown in the up movement. And again, the high there, that 311.98. This latest 2-day candle that finished drawing, 310.71, it is a green candle. It is above the 2-day trend line, and we hope that trend is just going to continue. The price percent oscillator is flat, derivative oscillator losing momentum. Go to the half day. Of course, it crossed over going down back on, I would say that happened back on the afternoon of Monday, like that's a long time ago, yesterday. What do we see go on today? Up in the morning, a little further up in the afternoon. Again, moving through that half-day trend line. So we'll continue to watch and see. We're still in that Nasdaq 100 trade. It's still moving in the right direction. If indeed you decided to jump into it, did not push you guys to necessarily do that in a practice trade because it was a very weak crossover, but we'll continue to watch. We'll be happy to pull that at the appropriate point as we provided to you last week. We actually gave you the profit and loss band training. Very important to set those profit and loss bands the minute, well, actually before you enter a trade. You know what you hope to make on it, and you know what the acceptable loss is where you're going to pull that. Very, very important to use those. And of course, we'll continue to keep a close eye on the S&P 500 as well as this Nasdaq 100 trade as we continue to see how it develops. Now, we're going to leave stocks, going to go to bonds. And what do we see going on 20-year bonds? Up for the day. The only things we had up for the day was the Qs and the Nasdaq, well, which is the Nasdaq 100 and 20-year bonds. We look at how this week is developing. Again, a solid green candle, so that's a slowdown in the down movement for the week. Price percent oscillator losing downward momentum. Oh, it's actually really just going flat. Derivative oscillators, what's losing downward momentum? We just see a flatness there. And again, we can sort of see that in this sideways slide. As we go to the 2-day, that's where you can see how things had sort of bumped up, but they're just sort of moving along about the same mark, somewhere around the 156 mark, well, almost 157, just sort of sliding along there. We do see on this latest 2-day where we had the crossover that occurred going up, and that pulled us out of any down movement. Then it sort of looked like it was crossing over going down, and then of course bounced off of that. So maybe bonds are going to be recovering. Now, if bonds do start to move up strongly, typically means that your market's going to be weakening. Why? Money tends to move from the stock market and the bond market and vice versa, depending on how they're doing. Stock market's doing good. Bonds typically don't fare so well. Bonds are doing really good. That shows you problems with stock. Again, it's just a place where money tends to flow. So we'll continue to watch and see and let these charts lead us as we move along. What's going on the half day? We see that it is slowly ticking over and, of course, crossed over going up in the morning and about the same in the afternoon. Doesn't look like it reached a higher high. So that's where we are on bonds. We're just continuing to watch and see what they are going to do with us. We don't have a trade on them now because the 2-day's moving up. Weekly is moving down. Remember, we have to have our intermediate, that is the 2-day, and our long-term, that is the weekly indicators, or again, moving in the right direction, and that is primarily the price percent oscillator. Now we move on to gold, down for the day 0.19%. We look at gold and we see on the weekly chart 3 weeks of trying to move up. Haven't hit a higher high than last week so far. This week, price percent oscillator was flat, now is moving down a little bit. Derivative oscillator losing downward momentum. We're still in a confirmed down move in gold, even though we've had 3 weeks of green candles. So that's open box green candles, which again means up movement. The solid green means slow down in the down movement. Now, when we look at the 2-day chart, We had 4 days of decent up movement, and then this latest 2-day is a red open box spinning top, almost a doji. Means indecision, a slowdown markedly in the up movement. We look at the price percent oscillator losing momentum, going flatter. Derivative oscillator actually has lost momentum. It peaked back on that Friday, Monday of this week candle. So that's where the derivative oscillator actually peaked. Price is still above that 2-day trend line. Now we look at the half day. We can see where things peaked back on Thursday morning and then just sort of slid sideways and are devolving at this point. Price is still above the 2-day on the half-day chart, but moving down toward it. And again, like I said, at the end of the day, we had that crossover going down. Just to make sure we remember that, we're going to actually draw our trend line right there and keep that in mind. That's where we are, folks, as we continue to move along. Hey, treat yourself to a great Christmas present. Buy yourself our book or buy it for a friend. We got an autographed copy waiting for you. Thank you again, Patreon supporters. Thank you, friends. We love to hear from you. Don't hesitate to write us, cw@chartingwealth.com. God bless. All the best. From the whole team at Charting Wealth World Headquarters, Merry Christmas, y'all.